Hey guys, welcome back to the course. Here is the most important part of Forex trading. This is all non-trading based and non-trading related, but everything that you need to become a successful trader. And I am going to go for a few examples on start to finish executing trades, for example, blah blah blah, at the end of this video on TradingView, showing you how you can manage your risk, etc, etc. From the last video, as I say, you can manage your trades and all of that good stuff from MetaTrader, and we'll show you now when and how you should be doing it. So, number one, you need to understand that you are going to lose. No trader wins 100%. Don't believe what you see on the internet. I myself am guilty of doing it. I very rarely show my losses because why? Nobody wants to see the losses, basically. I show my winners. I show that you can actually have profit and success from Forex. 90% of traders lose money, and 99.999% of traders have lost money at some point, even if they do become successful traders like ourselves. Of course, myself, Tans, James, we have all blown accounts in the past. Most of us more than once, most of us more than twice, multiple times, thousands and thousands of pounds lost. Don't make that mistake of just blowing your entire account. We're here to help you fix these problems that we faced. However, you aren't going to win 100%. So, analysis is only 10%. Mindset and psychology is 90% of trading. In trading, you have to accept that it's going to be stressful, and that's going to be more stressful than anything in the hard work side of things, e.g. doing your analysis and practicing. You got to think long term. Small consistent gains lead to big results. If you think about it in the long term and you have £1,000 to start with, you make 10% a month. Within 2-3 years of 10% a month, you're going to see some huge results. To begin with, 10% in the first year is not going to be a lot. You're going to make £100 in the first month, 110 in the second, 200 and whatever in the third, and it's not going to grow that quickly. But once you start seeing that consistent gain and you start compounding your account, putting more money in, the gains are going to get bigger and bigger and bigger, and you're only going to consistently gain. Next thing is patience. There's no rush to trade. Make sure every trade you take has the highest chance to win, and you're 100% confident in it. If you have any doubt at all, don't take the trade. Patience. There's no need to trade. If you're taking the trade just for the sake of to trade, quote unquote, you go and you lose, you've just wasted money for no reason. If you want to trade for a living, you have to trade like you're going to do it for a living. You can't do it, I'm going to try and make a quick flip and make £1,000 in a day. It doesn't work like that. And that leads me perfectly on to the next point, which is greed. Just don't get greedy. This is going to end your trading career, probably diminish all hope that you have, and just demoralize you completely. Once you've blown your account, it is really hard to bounce back. Even if you do everything right, you can still lose a trade or 2 or 3 or more. Doesn't mean you won't be profitable. Our main strategy has around a 60% win rate, which means every 10 trades we lose 4 of them. Those 4 trades averagely could be 4 in a row, and we're down however much money, and the next one could blow up and be great. Make sure to check out the motivation and psychology section in Discord for more tips on these parameters. I highly suggest you go through, watch the videos that myself and Tans have created, and just look at it, and please try and understand and get the gist of the mindset behind trading. Managing risk is everything. How you manage risk, you should always be risking 1 to 3%. This means you should lose 1% of your account if your trade hits stop loss. To do this, we can use an app called Stinu, or we can use MyFXBook Risk Calculator, which is what I'll be demonstrating after this brief PowerPoint. For example, if your account had £10,000 and you only want to lose around £100 per loss, which is 1%, again, you don't even have to know maths to do this. We've got a calculator that does it all. TradingView tells you the pips and the entry points, so it's so simple. Utilizing risk reward. What risk reward is every 1% that you risk, the reward that you gain per that 1%. So potentially we aim for 1 to 5. If we risk 2% per trade, we aim to get 10% back. If you don't understand ratios again, you will slowly get the hang of it. So remember, 1% per risk to begin with, especially if you're a beginner. We should aim to get a minimum of 2% per win. Obviously we aim for a lot higher, But if you want to be consistently profitable, it has to be at least a positive risk reward ratio. Makes our life much easier. We set our targets based on the market and our analysis. Any trade that doesn't satisfy this risk reward ratio, we should completely avoid. But none of the strategies we have should get you below the minimum of 2% risk reward. With Vertex, we aim for a minimum of 1 to 5. TANS, the other mentor in Vertex, trades at least a minimum of 1 to 10. We can then lose 5 consecutive trades before we even start to lose money if we do win one trade. It's all about using this concept and manipulating the markets, manipulating probabilities. We know we're going to lose, we just need to consistently make sure our wins outweigh our losses. And I don't mean in percentage, I mean in ratios. So managing trades, partials and moving stop loss. This will be explained a little bit in each of the sections of each section of the strategies as you go into it. So taking partials in trading, we can partially take profit, which I did explain in the MetaTrader video very briefly. You can close a percentage of your trade. For example, we risk 2%. When a trade goes into a certain amount of profit, whatever you're happy with example 1 to 3 risk reward, we can close half our trade. So then you've got 3% that you've taken profit in, that's guaranteed. And then we have the remaining 1% risk running, and we can try and milk as much profit from the market as possible, whilst also securing our profit with the other half and making sure that we still grow in our account and we can sort of get a little bit greedy, but we've still managed it and we have taken a win from this trade regardless of what happens. Stop loss to break even. This means moving our stop loss to where we entered the trade, meaning if price was to turn against us, we will lose very minimal amounts. We only do this when we are in significant profit. For example, if we were 3% up, took partials, hold the remaining 1% risk-free, because stop loss is our entry point now because price has already moved. And when that happens, that means if price hits our stop loss now, we don't lose any money. And finally, trailing stop loss. This means we can move stop loss to follow price. Usually stop loss, we move stop loss when price has created new highs or new lows, remember in the market structure video, which is very important, like I mentioned. Remain patient. You're going to spend more time waiting than trading. This is why it's 90% psychology, because even when you're waiting, psychology and emotions have a play. When we do our analysis and set up our trades, you're often going to miss trades for no reason or for some reason. Remember, no trade is better than a loss. Sitting on your hands is in fact trading. The action of executing trades is only a small part of trading. Don't confuse doing nothing with being a patient trader. If you're missing trades, it means you're being patient. If a trade goes into profit and you have stop loss at break even and your stop loss is hit, that is you being a good trader. You've made no money, but you've managed your risk and you haven't taken a loss. You may go hours or even days without finding a good trade to take, and this is completely normal. Often trades leave without us. What this means is we have our entry point set and price will just fly off in the direction that we expected, but earlier than we wanted it to. This again is normal, we can't help it. Often this happens and we have no explanation for it. All you need to remember is risk-reward ratio. If we're manipulating these probabilities, then we're going to win. The only goal of trading here is to make money in the long term. That's it. Whether it be for freedom, for, monetary value, whether you want the materialistic things, making money is going to do this. And to make money, you've got to do all of these things in this video. Frustration, you're going to hit break even a lot after having profits running massively, especially in our main strategy, which is the order blocks strategy in the Discord community. From here, potentially you could have 10%, 20% running. That's 20% profit of your account. And you could hit break even, which is why it's important to take partials and managing risk and don't think about profit you could have had. Think about the money that you have saved by managing risk. Trading is 100% a mental skill. It takes knowledge, it takes emotion and psychology control to master it. It takes a lot of experience to get comfortable with losing, missing, and everything in between. So, doubt. Don't take a trade if you're not confident. If you ever doubt your analysis, go back, take a fresh look, get a second opinion potentially. I don't like discussing trades as it could influence your decision, but potentially from a mentor, it could be a good idea. Don't enter a trade with doubt. Even if it wins, you lose because you didn't follow your plan. Your personal life's going to affect your trading. If you feel like you have too much stress or anything going on that may affect your trading ability, just take a break. Again, don't lose money for the sake of trading, because you don't have to trade. That's the beauty of it. It's like going to work and you're tired and you can't do it, and you just say you're a manual labourer and you're physically just completely drained, you don't have the energy to do it, your quality is going to be a lot less. The only difference is you're risking your own money in trading. Don't do it. The amount you put into learning will all affect the strategy and the results that you get. And always follow your trading plan. We'll go through it at the end, but when you write your plan, you must follow it. Breaking your trading plan will severely affect your results and consistency, which is what I was saying before. Having a plan is 100% required to have success in Forex. So, the very last point before we head over and show some examples of how you manage risk is you must practice, okay? Learning the content is great and all. We can give you everything that you need, but experience is the only thing that can teach you to control your emotions and develop the market killer instinct. Even if we give you everything that we knew, which we pretty much have in this course, in this Discord community, we're giving out everything, we're not holding anything back. We can teach you everything you know, and you'll not be successful in trading unless you put the time into practice. Like we said in the welcome video, you give us your time and we'll give you our time. Like we said, just focus on yourself. So we're going to head over to TradingView and my FX Book calculator, and we're going to go from there. I'll see you over there. Okay, so welcome back. We're on the charts on TradingView. Of course, here is the link for what else, the other thing that was showing you, my FX Book calculator right here, or you can literally just search my FX Book position size calculator or even risk calculator, something along those lines, and it will show up on Google search. So for example, let's just say we were taking a short trade. I'm not going to analyze, again, we haven't gone through strategies or anything like that just yet. I just want to show you how this is going to work. So eventually, let's just say I was taking a short position here, my stop loss was right here, and my take profit was here. These are really bad examples. We never use stop losses this size, but I just want to show a point. So you've done your analysis, for example, this is what you've got. You want to, before you place the trade on TradingView, you want to go 92.7 pips for stop loss. So let's say your account size was $100,000. Obviously, a lot of you most likely won't have that much. We want to risk, let's say 1%, okay? So it already knows that we're going to risk 1%, which means we're going to lose £100 if we lose. £1,000 actually, we've got £100,000. 92.7 for the stop loss in pips. And that's literally it. We find the pair, which is Euro AUD, as we can see here. Calculate, done. And this is the lot size we use, 1.42. It only lets you go to 2 decimal places, so whether you round up or down, that's completely up to you. 1.43 I would use in this situation. Then what we do, we head over to MetaTrader, we hit trade, find the pair, and then go from here. So this number here, the red one, is obviously where our stop loss is. So where it says stop loss, that's going to be our stop loss. If you're entering at market current price, which is called market execution, you leave it where it is. You don't need an entry price. If you're using a limit or a stop order, then you will need to put price in, which will be your entry point here. And again, you take profit right here. So let's say we were in this trade, we place it with 1.43 lots, and then we're good to go, right? And that's what we're using. For example, if the smaller the stop loss you get, let's do 50.1 here. We've almost half the stop loss. Now our lot size is now 2.6. This means we're going to make so much more money, but this doesn't mean just make your stop loss as small as possible, because you do have to adjust to the markets, give your trade breathing room, and we are going to show you this in the strategies that we show how you should be doing this as per separate strategies. But in this scenario, if price was running, let's say we've got this here. If you have the standard trading view, you won't be able to do what I've just done. You do need the pro version to do it. But what you can do is just drag it off the screen like this and go through. But for this scenario, I'm just going to show you. Let's say we've entered, price came straight down into profit. We just missed stop loss here, which is why stop loss would have been tactically placed. Comes down, price is in profit. At this point, we are running very, very nicely. Again, usually this will be in your trading plan. When should you change your trade to break even? Personally, I like to wait till I'm at 1 to 3. And 1 to depending on the strategy I'm using and depending on the target, I like to go for 10% of the target. So let's just make this a 10 risk reward just to make it nice and simple. Right there. So 10% of the target, no, sorry, not 10%. Oh my God. 30% of the target. So once you're at 30% of the target, which right now, let me just match up this and check. There's better ways to do this, but I'm just going to do it this way. So this is currently running at 4%, which is 40% of our 1 to 10. We have a 1 to 4 currently. What I'd do now is I'd move stop loss to break even. So now my stop loss is here at the entry point. You see there's only like a minimal difference. Once that's there, if price comes back up like this, we don't lose anything. And at this point also, I like to take partials. So if I was risking 2%, which is what I personally risk, I would take off 1% here and I would have secured 4% profit, which obviously in this example, £100,000 account, dollar account, I've made $4,000 and I still have 1% running. So let's just play out the trade. We already know where it goes, which is nice. And eventually should hit take profit, I hope. I didn't see all the way, I'm not gonna lie. We're just going to play it out and see what happens. Again, sorry if you can hear me spamming my mouse here, obviously. Let's just go daily and see if it hits. There we go. It finally hit. So that's take profit hit. It's all the way over here, but again, we do hit take profit. So again, if I just want to see how... Rat. Has completely frozen on us, but if I did want to see how much, I had to put my stop loss back to original, but we knew it was a 1 to 10 target, so we took that 10% from the remaining 1% risk that we had on. Again, 1 to 10 means we're taking 10% profit, and we already took off the other percent at 4% profit. So now we've got a total of 14% profit. We can lose 7 trades at 2% risk before we even go through, and if that trade lost, we already know we're going to lose around $1,000 plus or minus the broker fees. But again, that is how it works. Very simple, very easy to do. And this is the concept of risk reward, managing risk, managing trades. Very simple. Potentially, I could have even extended my take profit and then I would have put my stop loss here above the next lower high. And obviously, if price breaks this, we're expecting price change trend direction, which you should know by now. And if it doesn't, and it makes an equal high, then we're going to see a drop. We're okay. And either way, our stop loss would be tactically placed so that we're going to maximize as much profit as possible. And these are the 3 concepts that I want you to know. Make sure you watch this video multiple times. Go through, use a demo account and try and risk 1%. Practice it. You don't have to know what you're doing with the trades just yet. Literally just go and do that. This is the end of this video. Hopefully you enjoyed, hopefully you understand. If not, watch again, and again, if not, feel free to message me in the community and I will be happy to reply. Hopefully I'll see you soon, and see ya.